How do you assess whether a stock is undervalued or overvalued? Do you hear that those terms a lot? Like the stock is
Yeah.
undervalued, overvalued. Like, what does that mean? And how do you actually make sense of that?
I think the easiest way to explain it is it not talked about enough, and is it too hyped? So NFTs were too overhyped at one point. Shout out to those of you who made money in them.
Do you see the
But
Justin Bieber thing? He bought a
what
board
happened?
eight. He bought a board eight yacht
Oh yeah, yeah,
for 1 point, I think 3 million, or 1.1
mistake,
million, a few years ago, and now it's worth like $60,000 now.
mistake. But shout out to Bieber
So
and everybody.
that would be overvalued.
Overvalued. So I think all the greatest investments on earth, and this is what the conversation I had with LaRusso yesterday. Like you're measuring the wrong metrics to determine if a brand is doing well. So like if you're not focusing on the right KPIs, please write this down. Like you have to focus on the right KPIs to know if an investment is solid. Take the emotion out of it. But if you look, when I'm looking at a company, I'm looking, can you have an impact on this world for a 10 to 20 year period? That is a generation. That takes 50% of companies out of that cycle. And as an investor, you have to have a very stoic and logical brain when it comes to it, because everyone had a lot of emotion around NFTs and a lot of the meme coins, but it's like, well, who was putting out the propaganda for you to do that? The best investments in the world are going to be very quiet until they ramp up and take off. As soon as he's like, hey, Sam with Oprah, I said, shit, that's the public stamp of approval right there. No one's getting that lead from them. I saw this happen in 94 and 96 with Bill Gates. No one got that lead from Microsoft, even when Ballmer dropped the ball for a fucking decade. No one got that lead. So, and also too, you can go to Guru Focus or joinredpanda.com, EY University. This show will tell you if it's undervalued or overvalued. I think more people need to listen for sure.
When they bring up and maybe this is like the homework assignment. Remember you used to throw out the homework assignments?
Yep.
Maybe this is the homework assignment, because a lot of times people will hear the word, it's trading on its multiple, right? And I guess it would depend on the sector, right? Because technology have a different multiple than industrials, than finances. Is there, let's throw out just technology, is there a multiple that would indicate overvalue, right? Is it 20 times X? So meaning that it's being percentage is being multiplied 20 times its future guidance. Is there a number?
If it's 40 to 60 over, it's too rich for my blood.
Okay.
And my thing is that if it's at that high of a multiple and no one can tell you why it's that valuable, with OpenAI, they can tell you right now why it's worth that. Just on a subscription on the retail side of the business, they're bringing in what, like $300 million a month just off the subscription base.
Right.
We haven't even got to the contracting side on the back end and B2B. Okay, great. But if you're telling me in 2021, a company in Nova Scotia is worth more than Apple, or we see companies rise in value in the meme coin space and it's worth more than Google, how? It makes no sense.
Yeah, so your multiple is the price times your earnings, right? How much you can make over a specific given time based on the future innovation of the company. So if anybody's confused with that,
yeah.
What strategies do you use to manage risk when investing in volatile stocks?
Stop losses are key. I'll say this, please clip this up. If an asset falls negative 20%, you have to get out and look to get in at a better price. A lot of risk management really just is obeying your rules and your laws when it comes in. So like, even if going back to the criticism conversation on the phone, it's like if you're not measuring the right thing and know when to cut things off, you're going to bleed to death. For me personally, I don't like for a stock to drop 35% or 40% in value while I'm holding it. That's why I often look to get in around 18% off the high down to 35%. Most people are buying $1 from the high and then like, well, it fell. You bought at the wrong price. So a lot of managing risk is buying at the right levels, B, cutting your losses when it's not going in your favor. And third, a lot of the risk is taken away if you buy good companies. That's the part no one wants. Like if you buy a tier one asset, invest in a tier one athlete that has great work ethic prior to you telling him to, everything's going to work out. That's why I think LeBron's value is so high and he gets put in that argument of greatest player of all time. The longevity matters. Tom's longevity matters. He's there, market mover, probably one of the most valuable players in the history of the league. Same with Apple. If Apple and Microsoft goes away, it changes the status of our country. I love Tesla. Tesla's not as reliable. Rivian, not as reliable. Like, these are the metrics you need to look at, especially because we're going into our 5th-year Market Mondays. If you're new, I understand. But if you've been here for a while, invest in the companies that are literally changing the world, but have an impact on the GDP of the United States of America. Even last week when I put out the list, okay, great. If Kamala Harris wins as president, and people are like, well, how do you know Visa and American Express? I can't tell you how I know, but I'm telling you, I know. Uber, incredibly important. Look what Dara has done. It's not talked about enough. That's probably one of the hardest turnaround stories in the last 30 years, to turn Uber around when they are operating on thin margins to eventually have wider gross margins. Visa, American Express, Microsoft, NVIDIA. If those 5 companies go away, it lowers the GDP of our economy. You'll need a 50,000 point basis rate cut at that point. You'll need negative interest rates if those companies go away. So
this is and I asked this question because this was brought up. So that the 20% is for the stock in the futures market. Do you change that percentage? And I'm asking that because when I look at, sometimes if I'm looking at an options contract, 30% will be my stop loss, but I might extend it to 35 depending on the company, right? Just
depending on what the volatility of the asset is.
Exactly. Because the volatilities in the futures market and the options market is a little bit different. So based on the stock, you might say 20% is the threshold for a stop loss. Do you change it when you go into the futures market? Obviously, I do it a little bit lower when it comes to options because of volatility and depending on the company. I'll give you an example. Like I said, TSM might be 35 or Micron, right? I had at 30. Once it hits the 30, all right, I got to find a new number. Is it the same for the futures market for you?
Futures is less because here's the difference, which is a great question. The option side, you have multiple days or multiple weeks for it to pan out. If you're day trading futures, you get to end of day. So if you have a 30% stop loss, you 3 losing trades in a day, game over. So big facts. Shah, tell them you're dead. So for me, max is 10%. Okay. If you want to be really safe, 5% margin, but maximum you can do is 10%. And then you have to look that going back to the multiple. If I'm risking 10%, I want to try to get 100 or 1100%. It's all about the mathematical equation, return on those. If you're going for a shorter risk to reward, you can risk 10 and go for 50% return. But if you're holding out for a 30% loss, 3 losses and you're done. You burn through all your money.
I'm glad you distinguished that. I'm obviously not talking about the day trading insider options or scalping or swing trading. I'm talking about obviously in leaps, so that the time is also varying inside. But I'm glad you made that distinction. Thank you.
Yeah.